Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another session, a live session, where we're going to be analyzing the market, where we're going to be looking at technical analysis, indicators, looking at potentially how today's event can create volatility and cause certain price movements live on the MT5. So we're going to be sharing our MT5. I actually share my MT5 right now. We're going to be looking at some of the most traded assets, not only on our platform, but generally speaking throughout the whole world. Assets like you can see on my screen now, such as gold, the US dollar, currencies in general, indices, and other commodities also. So we want to, of course, see exactly how NFP, which everybody knows is going to create a lot of volatility, but why specifically NFP creates volatility, what kind of volatility potentially it may actually trigger, but also when the announcement is actually made, to look at the price movement, look at how traders and the price is reacting, and to see how that changes technical analysis, how exactly we're going to see indications formed which point to a certain direction, to potential setups within the market. So of course, that's what we're going to be looking at as part of today's session. Now, of course, as part of today's session, we of course want everybody who wants to ask questions, who has specific assets that they want us to analyze, to of course leave a quick comment or the question in the chat section. And of course, we'll look at all assets that are being requested, and of course, all questions will be answered. So this is what we're generally speaking going to be looking at today. Now, the first thing I want everybody to be aware of is exactly what the event is that we're going to be looking at, ladies and gentlemen. Now, if we go to our calendar, we offer a calendar to everybody for free. If we go to today and we look at the United States of America, because of course today's event is related to the US, we got three major releases, and of course those releases will be simultaneously released at the same time. We have the non-farm payroll figures, we have the average hourly earnings, and of course we've got the US unemployment rate. So all announcements is related to the employment sector. Now, a lot of people are probably going to ask me, what is the non-farm payroll? The non-farm payroll is released every single month, and it's basically saying within the United States of America, from month to month, what kind of changes there has been in the amount of employed individuals. So for example, we can see here it is expected that the NFP figure will be 170. Keep in mind that our calendar will give you the average, because of course if we're looking at certain other sources. For example, today we were looking at Bloomberg. Bloomberg actually gave an expectation of 171. If we look at Jefferies, a very well-known institution on Wall Street, they actually gave a prediction of 169. Of course, our platform will look at an average, which is the most responsible take on this. So at the moment, we can see the NFP is expected to come in at 170,000. That basically means that this month there has been 170,000 more employed individuals in America. Now, because it's America, it's going to have an effect mainly on assets which are going to have which are more related to the US. So for example, of course, the US dollar. I can see a lot of people here saying, please look at the Euro USD. Somebody here says USD CAD, sell or buy. Another person here, I can say, looking at the pound against the US dollar, that saw a lot of volatility yesterday because of the Bank of England. We definitely will look at that and look at what indications we're going to see. So that definitely will have an effect on the US dollar. On gold, I can see a lot of people mentioning gold as well, on indices such as the NASDAQ, S&P 500, and Dow Jones. And it's actually one of the events within the month which triggers a domino effect throughout the whole of the financial trading market. It even can have an effect on Asian stocks, European stocks, and other currencies as well. So we need to keep that in mind. So we've got three announcements. The unemployment rate is self-explanatory. average hourly earnings just confirms how much salaries month by month are increasing or are static or have declined. The main announcement will be the non-farm payroll figure. How many more employed individuals there has been in the previous month. Now, a lot of people want to know if that comes in higher than expected, what effect will it have? If it comes in lower than expected, what effect it will have? And if it comes in as expected, again, what kind of effect will it have? So let's start if it comes in higher than expected, because there have been quite a few people on the chat, as I can see, who I can see is saying, I think it will come in at, somebody here says 200, somebody here says 210. So let's look at that outcome at first. So let's say it comes in at 200,000, maybe more than that, maybe slightly lower, but it comes in more than expected. What effect would that have on the financial trading market? Now, if we're going to follow traditional economics, and normally what kind of ripple effect it may have on the market is that a strong NFP tends to support the US dollar. Why does it support the US dollar? Because if the employment sector is doing well, it means inflation is more likely to rise. It means consumer demand is more likely to rise. It means the Federal Reserve would definitely take into consideration not adjusting the monetary policy for a prolonged period of time. For example, if it comes in much higher than expected, it could be 7 to 9 months until we get an interest rate cut, which is very different to what is currently being priced in the market at the moment. So these are the main reasons why it tends to trigger a more expensive US dollar. Now, if we look at indices and stocks, okay, if it comes in higher than expected, there's two ways the investors can look at this. Number one, they can look at it as the fact that the Federal Reserve is going to be less likely to cut interest rates and cut as frequently, and it can very quickly cause the stock market to decline. Or alternatively, it may provide that reassurance, taking into consideration, of course, now that we have potential trade wars. There's a lot of talk between China, the European Union. It could be next week or the week after that the US will come and say there's going to be X amount of tariffs on the European Union. By Monday, potentially, we may see that. If you look at the last 2 Mondays, we had deep sink crisis. The Monday that's just passed, we had the tariff crisis, which has kind of cooled down since then. But you can see big market movements on Monday. So keep an eye on that, of course, for this Monday as well. So it could also be that strong employment data will provide that reassurance in the middle of, lower risk appetite in the market because of those tariffs, because of these potential trade wars. So there's two ways we can look at it in terms of stocks. In terms of gold, though, ladies and gentlemen, higher NFP can trigger gold to decline in value, especially because gold is so expensive at the moment. If we go back to the price of gold, ladies and gentlemen, here, let's actually go to a weekly time frame. Look at the price of gold. It is at an all-time high. If we recall the live sessions that we've had, again on YouTube, on Facebook, on Twitter, and we look at the events that we had in November and December, we keep repeating analysts' expectation that gold in the first 6 months of 2025 will hit 3,000 US dollars. And look at this, ladies and gentlemen. In the past 6 weeks, gold has been increasing in value. So keep in mind, if NFP comes in much stronger than expected, it can very quickly cause gold to decline potentially, because it's also at a very high price and at a point where large institution and institutional investors, generally speaking, will look to cash in their profits because it's at a swing high. It's already formed a breakout. We're considerably high on cumulative delta and higher than the volume average price, the volume weighted average price as well. So a higher NFP data could potentially cause that to decline. Now, if we switch that and we go back to what is going to be released and say it comes in weaker than expected, okay, especially if it's much weaker than expected, then especially for gold, we're looking at a scenario where we've got weak employment data. So is the employment data, the employment sector's resilience starting to become more shaky, which it hasn't in recent years. So that will definitely be a first. Because it's already balanced out. Previously, it was imbalanced. It's now balanced out. If this comes in much weaker than expected, we're going to start looking at a scenario of, is it starting to become a shaky sector? And in addition to that, we've got other risk factors as well, such as the trade wars, such as the tariffs, the new the new administration in America as well. Because of all that, it can really support and fuel gold further, and that bullish trend. So that's also something we need to take into consideration. If we get a different type of price, a different type of announcement, if we get the non-farm payroll come in lower than expected. So let's go back onto the charts here. If we go to a 2-hour time frame, a 2-hour time frame is a nice time frame because it's neither a scalper's time frame, it's not a session trader's time frame either, but it's not a long-term time frame also. So it can give us that short to medium term bias in terms of technical indicators. Now on my chart here, I've got a trend line, which is a 75 bar exponential moving average. We can see that's acting extremely well, ladies and gentlemen, on the 2-hour time frame. Look at this. Look at how that trend line is acting extremely well. The other thing which I've got on my screen as well is the blue line, which is a 100 bar simple moving average. That's not a trend line, that's actually a price sentiment indicator. And then here at the bottom, we've got the RSI. Now the RSI is also very close to seeing divergence, which is an indication that the price actually could retrace. So that is the bias for today. Like I said, we're extremely high with gold. We've been increasing in value consecutively. We get an indication here on the oscillator, the relative strength index, on an 18-bar period that potentially it could retrace. We saw the retracement yesterday. We spoke about it in yesterday's article as well. Now, if we're going to get a retracement again, then the nice thing about this level here, ladies and gentlemen, is that it's in line with the support level. So you can see we declined here. We formed the price rejection candlestick pattern at the support level. So that's one reason why we're there. The other reasons why we've got this line here is because it's in line with our trend line, the 75 bar ENA. And here you can see it's a resistance point. So it's also a resistance being flipped onto a support. So if we are going to get a negative announcement, and we are going to follow the bias that the price is extremely high, it could be in a nice area for a lot of institutions to trigger some profit taking, and we're very close to seeing divergence on the RSI as well, that if it's going to decline, we can look at targeting this area here. Now on a 5-minute time frame, so much smaller time frame, ladies and gentlemen, we can see the price has been increasing in value for 10 minutes. That also gives us a breakout point. So if we get volatility regain downwards, then we can look at that line there to enter and speculate a decline potentially, only based on technical analysis, because we're below the 200 bar simple moving average here. We've got a bearish crossover, and that will trigger a breakout. All right. So let's see, ladies and gentlemen, because we've got a few seconds, we've got almost 10 seconds now, ladies and gentlemen. So we're about to see the price movement, ladies and gentlemen. We'll look at the price movement, and then of course I will take you back to the calendar and see what has actually been announced. I will, as promised, I will take you back to the calendar. Look at this volatility, ladies and gentlemen. We're seeing upward volatility. We'll look in a moment, ladies and gentlemen, if that's because the NFP data has come in lower than expected. If it has come in lower than expected, like I said, it's a real area where it could fuel upward price movement. Now, if we are going to see that, there's a couple of things that we can do as well. We can also look at 65% momentum. Now, the candlestick high is here. The candlestick low is here, ladies and gentlemen. 65% momentum is here. So a price above this could be an area to speculate and indicate upward price movement, an indication based on 65% momentum being regained. But again, the announcement's been made. let's look at what has actually been announced first. That is very important. So let me quickly refresh my calendar. Let's go to today. Let's go to filters. Put America alone so we can't see all the global announcements but America. Look at this, ladies and gentlemen. Here we've got mixed data, okay? The non-farm payroll figure, which is the most important, has come in lower than expected. That is a lot lower than expected as well. So keep that in mind. The other thing, though, ladies and gentlemen, is that the average hourly earnings has come in higher than expected. That can really support higher inflation as well. In addition to this, we have the unemployment rate, which is coming lower than expected. So we've got mixed data. Normally, we get the strongest signals when we have all three announcements point downwards. So everything is negative or everything is positive. And today is a scenario where the most important data is lower, but we've got two pieces of information there. The unemployment rate and the average hourly earnings has come in stronger than expected. So let's go back to our announcement here. And we're actually moving downwards now, okay? Keep that in mind. And that is why here, when we were looking at upward price movement, I didn't enter straight away. I didn't say this is an area to enter. It retraced, and then we put a line up here, ladies and gentlemen. Like I said, we put a line up here and said if that momentum was regained, then that would be an indication to potentially speculate an increase in value. But again, that hasn't been regained. And look at the decline, ladies and gentlemen. We've said so far today, okay, the data is mixed. Keep that in mind. The data is mixed. But before that, we said there was a lot of indications indicating to the price declining. Like I said, 7 weeks of consecutive increases, opportunity now for institutions to cash in on their profits. And also on the 2-hour time frame, the RSI indicating divergence, which again will is another reason that we get an indication indicating basically that the price can retrace. So that's currently what we're seeing in the market, ladies and gentlemen. Now, because the price movement is mixed, a lot of people potentially may not want to, ladies and gentlemen, continue to speculating all the way down to the support level here. Some people may look at, for example, 70% of the support level. If we look at 70% of the support level, it's actually at the 0.90 mark. 0.90 mark is there, exactly here. So 2,845 US dollars, just above that, ladies and gentlemen. So let's put a line here. 45, there we go. Exactly at that point there. So the only reason why we slightly increased the target higher, so it's actually a lower take profit, again, is because the announcement is mixed. And because the announcement is mixed, there is a scenario where actually it could just form into a range-bound trading between these two levels here because it's mixed price, it's mixed data. So definitely that's something, of course, we need to take into consideration. Now, that's in regards to gold, ladies and gentlemen. Let's look at what's actually happening with the US dollar. The US dollar, if we're looking at currencies, generally speaking, ladies and gentlemen, as well, keep in mind that currencies from this week, and actually currencies in 2025, the weakest currency of the week, especially yesterday, has been the British pound. So keep that in mind. If you're looking at the US dollar increasing in value, there's a scenario where there's more benefit to looking at the British pound against the US dollar. Why? Because the British pound has been one of the weakest performing currencies of the week. Now, if we're looking at the US dollar decreasing in value, where is there the most opportunity? Now, the best performing currency of the week and the best performing currency of 2025 so far, so more than a month, ladies and gentlemen, almost a month and a half, has been the Japanese yen. So keep that in mind. The Japanese yen is also the only central bank, ladies and gentlemen, in 2025 from the main central banks, so such as the G7, for example, that economists believe will increase interest rates. The Fed is expected to cut interest rates on 2 occasions towards the end of the year, 25 basis points each time. The ECB is expected to cut by a further 75 basis points, and the Bank of England is actually expected to cut 0.60% in this year. And again, a further 2 cuts, ladies and gentlemen. The Bank of Japan is the only central bank which is expected to see which has given a forecast of higher inflation, higher salary growth, higher economic growth as well in terms of GDP. And also they're expected to continue increasing interest rates, not in the second quarter, but again in the second half of the year, but in the first half of the year again, and by the end of 2025 to have an interest rate of 1%. Now, if we look at a few months ago, the Bank of Japan, generally speaking, had the negative interest rates. Their monetary policy was extremely expansionary. So they've definitely seen a very different scenario here, ladies and gentlemen. So any individual that wants to speculate that the US dollar will decrease in value, there's more opportunity at the moment when looking at the US dollar against Japanese yen. Why? Because the Japanese yen is the best performing currency of the year so far and the best of this week. So definitely keep that in mind, because ideally there's more benefits and there's more indications, clearer indications when you don't have two currencies colliding. So for example, two currencies increasing in value, two currencies decreasing in value are harder to trade than when you got an exchange rate where one currency is performing well while the other one is decreasing in value against the whole of the market. Now, if we're looking at the US dollar against Japanese yen, if we are going to get the US dollar increase in value, because we always have to keep in mind an alternative scenario, then we've got our trend line here, or alternatively, we can look at the swing high here. So somewhere in between these levels here, if we're looking at speculating in that direction. Now, if we want to speculate that the US dollar will continue to the US dollar will actually decrease in value against Japanese yen, then we can look at that 65% of momentum being regained, which is at this level here, ladies and gentlemen, this level here. So that's something that we can also look at. And if we switch to let's actually go to a 1 minute time frame, I'd prefer, due to the volatility at the moment. Look at what's happening here. There we go. So downward price movement. Like I said, US dollar, if you wanted to decline, the most beneficial is against Japanese yen at the moment. Let's compare, for example, if we're looking at the US dollar against the pound. Look at this, much less volatility, much less volatility, and less of a clear price movement, ladies and gentlemen. So keep that in mind compared to here. Look how much clearer this is, ladies and gentlemen. So if we are going to continue speculating a decline, and of course we can continue speculating a decline, we're definitely below the 200 bar simple moving average on the 1 minute time frame. The latest crossover is a downward crossover. We can continue to speculate the decline all the way down to our price rejection level here. Now, for those individuals that don't want to open a trade all at one price, you can look at scaling in. So for example, entering now, but then entering here, a second trade here. So 0.05% lower. Where's the current price? There's the current price. So basically slightly higher. So there. So entering a second trade there, then entering a third trade here. And then what I'm doing is I'm very simply scaling in, ladies and gentlemen. So I'm spreading the risk of the timing and the trade across multiple trades, like so. And then what you can also do is look at multiple exit points as well. This is known as scaling in and scaling out. So that's something you can do, and also to mitigate the risk across multiple trades. But we can definitely see the indications that the US dollar in the short to medium term, not just necessarily right now, is potentially going to decline further. Now, it's retraced slightly now, We've broken above this candlestick. We're not yet above this candlestick here. But when we do get retracements like so, we wait for them to build. Let's say it continues to build somewhere up here. And then again, we look at 65% momentum being regained to continue speculating, not the retracement, but the trend overall, ladies and gentlemen. Now, what I will say is with the Japanese yen, with technical analysis, you always need to look at, an alternative. So for example, people may be looking at the 1 minute time frame breakout level here, starts to increase in value, then we get another breakout level here, open another trade, continue to speculate, another breakout level here. Look at all these signals, ladies and gentlemen, continue to speculate, but then we get a different option here. Okay, so it's all about amending the trade. So now we've got a bearish breakout. So here we start speculating downward price movement. And of course, you can see after the announcement, it did indeed shoot downwards. So you can see exactly how we're opening multiple trades and we're following the price movement, we're following the momentum, but there's always that scenario of opening that alternative trade and exiting, of course, at the appropriate time. Now, a lot of people here are saying the NASDAQ. Somebody here says, buy the dip, thank me later. Gold is going to hit 3,000. So now we mentioned this previously before, but keep in mind at the moment with gold is short-term volatility is very important. We said a minute ago that between that low and that high, because it's a mixed announcement and the price of gold is very high at the moment, and it's a Friday as well, it could just form into range bound. So trading sideways between those 2 points. So that's something, of course, we can look in and take into consideration. Now, a lot of people here are speaking about the NASDAQ. So I'm going to go through the NASDAQ. And what I want to say is, with the NASDAQ, the great thing about the NASDAQ is there's a lot of things you can do in order to back your indications. To say, this is an indication to say that what I'm seeing on technical analysis is actually accurate, and I'm not going to get a false breakout. I'm not going to get an incorrect indication. So what can you use to assist you with this, ladies and gentlemen? Now, there's a few things we can use. Number one, we're going to use the components of the NASDAQ. Number two, we're going to use the VIX. Number three, we're going to use global indices as well. And the other thing we're going to do is we're going to look at the Fed CME Fed tool, and we're going to look at US bond yields as well. So these here, ladies and gentlemen, is just basically look at different things within the market which are going to indicate to us that, yes, if we've got a bearish signal on the chart, is it backed by fundamentals? Or if we've got a bullish signal, again, is it backed by fundamentals? So it's trying to filter out those false breakouts, false indications. Now, if we look at, let me refresh actually. So here we can see the NASDAQ, ladies and gentlemen. Now, there's different theories. Now, some people may look at, for example, the NASDAQ on the 10 most impactful companies. Okay, so keep in mind, because Alphabet has 2 stock classes, it's actually 11 here. Okay, so keep that in mind. So 10 companies, but 11 stocks. Some people will say, from those 11 stocks, how many are increasing in value? How many are decreasing in value? So for example, if I want to speculate upward price movement, I want at least from those to have 7 increasing in value. So for example, at the moment we'll include Netflix, 1, 2, 3, 4, 5, 6. So not quite 7. And also if we look at the stock with the most volatility, ladies and gentlemen, is actually this stock here, Amazon, which has seen a decline. Okay, so we don't yet, if we're looking at here, we don't have a signal indicating that, yes, indeed, there's a strong indication that NASDAQ may increase in value. In that case, to listen to what is being shown by technical analysis if there is a signal speculating a buy. Another thing, ladies and gentlemen, you can do is, if you're not going to look at the top 10 most impactful companies, you can look at the top most influential stocks. A lot of people look at all stocks that have a weight of 1% and above. So that's 23 stocks, ladies and gentlemen. And it's a similar scenario. They may say, I want at least 65% of those most influential stocks to be increasing in value for me to look at potential buys. Same thing applies for potential sales, 65% to be decreasing in value. So if we include basically Intuit, and above, because that's 1% and above, how many stocks are increasing in value? So from 23, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so 13 over 23. What I will say though is, a lot of the declines are stronger than the upward price movement. That's another thing that you need to look at as well, for sure. But even so, not enough stocks are increasing in value at the moment. But as soon as the market opens, because the market's going to open in 45 minutes, as soon as the market opens, then we're going to look at this again, because there'll be more volatility and suddenly there may be 65% increasing. And also, some of the stronger declines, like this decline here, ladies and gentlemen, and this decline here may weaken. Okay, and some of these upward price movements, for example, T-Mobile is doing very well. Also, Palantir Technology is doing very well as well. Some of those stocks will start to see stronger gains, for example. So no clear signal there indicating upward price movement yet. We don't have a signal indicating downward price movement, but not upward price movement for sure. Now, if we look at indices, what can you see here? All indices are in the red. Okay, all indices are in the red. The DAX is lower, the Dow Jones is lower, the NASDAQ, S&P 500, the Russell 2000, Nikkei 225, Eurostoxx 50 is all lower. So the global sentiment towards the stock market, based on the day's performance so far, is not giving me any assurance that the NASDAQ will continue to increase in value. The only thing which is giving me a very slight indication of potential upward price movement is the VIX here. So you can see here at the very bottom, the VIX. If the VIX is lower, it indicates the NASDAQ potentially can increase. But again, it's only slightly lower, ideally, because the VIX is very volatile. If the VIX ideally is declining by 0.75%, or even higher, ideally, -1%, that really starts to indicate upward price movement for the NASDAQ. So, and look what's just happened, 0.78%. So as that declines, ladies and gentlemen, we may start to regain some potential buy outlook. So this is why we're looking at this live continuously. Now, some people, they like just to look at technical analysis, but you don't want false indications. You don't want false breakouts. You want accurate strategies, accurate trades where hit your take profits. And this can, put aside those indications which are less positive. Now, higher bond yields are negative, ladies and gentlemen. Keep that in mind. Higher bond yields are negative. But even though today's bond yields are higher, okay, so you can see here the sharp upwards, over the week, bond yields are lower. So that increase isn't yet necessarily giving me any major concern just yet. Now, if it keeps on increasing, if it increases above 50, then that will start being a concern. And I won't, a lot of traders won't take into consideration bullish price movement on the NASDAQ. But because it's very low, that price movement is less important. Whereas if we were already high in the week and then we get a spike upwards like that, then of course that will be a concern. Let's look at the performance of the individual stocks. Performance of individual stocks, more or less about the same, ladies and gentlemen. So from the top companies, 1, 2, 3, 4, 5. So still 5. Ideally, we want 6 to 7, ladies and gentlemen. So again, that's something we're going to continue to monitor. Now let's look at the NASDAQ, ladies and gentlemen. Let's go to a 1 minute time frame. Actually, guys, look at exactly why I did that analysis. Okay, look at why I did that analysis. When we looked at this on the chart, okay, the price looked like this. Okay, that's what the price looked like. It looked like, yes, it opened on a bullish price gap. It declined very sharply, but then it was gaining momentum again. A lot of people would have been pouncing on that and trading upwards. But I needed to get reassurance that that price movement was accurate and we weren't going to get into a bad trade. Look what's happened since then. Look what's happened since then. Now, I'm not saying it's not going to increase in value later on in the day. 100%, of course, it may increase in value later on in the day. But I'm waiting for that reassurance. Now, actually, before, that we got that retracement, by the way, guys, we can look at, like I said, 65% momentum being regained. 65 momentum being regained is actually here. That falls in very nice with that resistor point. So you can see that resistor point here, for example. So that falls in very nicely. I'll keep that there. Okay. But like I said, we're going to go back to these levels here and see if these red colors, there we go. We saw some red become positive. If these red colors suddenly become green. So let's look at the top 10 companies. We now got 1, 2, 3, 4, 5, 6. We now have 6 out of 11, ladies and gentlemen. So in percentage terms, like I said, most traders, they want 65% at least. So if we go 6 by 11, sorry, that's 6 by 12. 6, 11, still at 55%. So we're not quite there, ladies and gentlemen. We need 7 stocks, basically. But if we go and look at the top, basically 1% weight and above, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So again, it's still at 55%. So not yet having a buy signal, ladies and gentlemen. This is also still increasing in value. So that's definitely something I'm going to keep an eye on, because if it hits 50, then that's a slight concern. Let's look at the VIX. The VIX has a clear signal now, an indication to buy. Clear indication to buy here, ladies and gentlemen, on the VIX. Minus 1%. And suddenly some candlesticks up, some of the global indices are becoming green. So the Dow Jones is higher. Best performance so far is the Dow Jones. The NASDAQ, S&P 500 as well. So people, not 100% on the NASDAQ, ladies and gentlemen, of course, they can switch over to the Dow Jones. Dow Jones is the best performing stock index globally at the moment. Let's look at the Dow Jones. So again, we can look at this retracement like so to see if we get an indicator to speculate upward price movement, which we're very close to doing. We're about to get it now. There we go. We just got it. Okay, we just now got it. Now let's look at the Dow Jones as well in terms of the companies in the Dow Jones. With the Dow Jones though, traders tend, because there's only 30 companies within the Dow Jones, so traders tend not to look at the most impactful. They'll look at the whole of the Dow Jones. So 30 stocks, how many are declining, how many are increasing? So increasing in value, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, ladies and gentlemen, for 30, 18, 30, 60%. So that's 60%, ladies and gentlemen. Let me just double check that. Is it 18? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Yes. So we're at 60. If we get one more stock again, we'll go to 65. But this is a much better picture, 100%, than the NASDAQ. And also keep in mind, there's a lot more defensive stocks with the Dow Jones. That's one of the reasons why it's performing better. So we're at 50 now. We're at 50 points higher on bond yields. So that's a slight concern for the stock market. So we need to be cautious. For that reason, a lot of traders and investors will switch to the Dow Jones rather than the NASDAQ for upward price movement if we want to speculate upward price movement. Otherwise, NASDAQ, ladies and gentlemen, a lot of people may, keep a bias of sideways price movement or slight decline. Now, in terms of currencies, ladies and gentlemen, we're going to look at currencies before ending today's session. look at the euro against the US dollar, ladies and gentlemen. So we currently have an indication of a downward price movement. We're below the 200 bar simple moving average. We can see that acts very well. We've got a bearish crossover here, ladies and gentlemen. We've regained 65% momentum. Okay, so we regained 65% momentum. That's an indication there. I can show you why we do that. Look at this here, ladies and gentlemen. That's another retracement. Okay, so you can see it's retracing upwards. I use 65% momentum. 65% momentum's at this line. It was triggered there. And you can see here we're much lower at the moment. How much lower did we go? We went 0.22% lower. Currently, we are 0.15% lower. Either way, it's profitable signal, profitable trade. Let's look at the pound against the US dollar. You can see, like I said this at the very beginning, pound against the US dollar for the US dollar increase in the value. This is exactly why. Same scenario. With this, we didn't even get a bullish signal through the crossover at all. Not at all. So we currently have a bearish signal even from the breakout, not just 65% momentum being regained. So signaling downward price movement, ladies and gentlemen. Let's look at gold as well on the 2-hour time frame, because we looked at targets for gold on the 2-hour time frame. It's kind of at the middle between in this candlestick here. You know, we did say again, because it's mixed announcement, we may see sideways price movement and range-bound trading. So that's something, of course, that potentially still applies with gold. Like I said, best performing currency at the moment. I actually double check that for you live with you guys. So if we go to FinViz and we look at currencies, best performing of the day. Okay, because of the announcement, it suddenly switched. US dollar is the best performing. Only 0.20% higher, so it's not really something to brag about just yet. Worst performing is the Swiss franc. But like I said, this year so far, best performing, Japanese yen by far. Japanese yen by far. Of the week, let's have a look. Best performing, again, Japanese yen. Worst performing currency of the week, S&P 500. After that is the euro, the Swiss franc, and the British pound. Of course, though, yesterday, a lot of negative information for the British pound. We had the cut. We had no member of the NPC vote for a pause. We actually had 2 members vote for a 50 basis point rate cut, not 25 basis points. So that's extremely dovish as well. And growth expectations by the Bank of England for the UK was almost halved, and inflation is expected to rise as well. So that's quite a lot of negative information for the pound, ladies and gentlemen. So keep that in mind as well, generally speaking. So, ladies and gentlemen, we've looked at gold, we've looked at the NASDAQ, the Dow Jones, we've looked at the Euro USD, cable, USD against Japanese yen as well. So there's a lot of information there for traders to take into consideration. Somebody here says, what about the euro against the Japanese yen? Of course, I will look at that. Any other requests, by the way, ladies and gentlemen, feel free to ask, of course. Here we've got a very clear bearish bias. We're far below the trend lines. We're far below the 50 on the RSI as well, currently at 39. Not yet in any way, shape, or form oversold, because we're not oversold anywhere here. We just about got to an oversold level here. People may want to potentially amend the period. So, for example, to amend the period to 16, so there's a higher possibility of getting to that level. Of course, this is something you may wish to continue to amend. For example, like so. So here you got an oversold level as well. I mean, that's down to you. Either way, it still gives a bias towards downward price movement. We're below the previous low as well. Signal in terms of the medium term, not the short term. If we're going to drop below the 65, So 65 is here. That's very close to the breakout. So people may look at the breakout. People may look at 65% momentum being regained. But also to look at the retracement for 65% being regained upwards. And what do I mean by that? Let's go to a smaller time frame. Let me actually get rid of all of these moving averages so it's clearer for everybody to see because it's purely price action. So 15-minute time frame. Look at this. So we can even look at this in the terms of the medium term retracement, and then if it's going to decline below here or decline below here, we can look at that as an indication of speculating downwards. People may want to be lower than these support levels. So for example, somewhere here, very, very close to 65% momentum being regained. But at the same time, they may look at this as a retracement as well. So if we're going to increase above here, again, then they'll look at that as indicating upward price movement and a correction. Maybe not a full correction, but a partial correction. So that's in regards to the euro against the Japanese yen. Somebody says, what do you think about Bitcoin against the US dollar CFD? Let's go to a 2-hour time frame. We'll of course look at this. Feel free, guys, to make a comment on an asset that you wish to look at. Here, ladies and gentlemen, we're at a neutral level here. If you look at the 2-hour time frame, we're at that resistant level. Here you can see we collapsed here, we collapsed here, we collapsed here as well. We're right in line with our trend line here. We're below the price sentiment line, but above the the RSI. Let's go back to an 18 period because of the volatility of the Bitcoin CFD. So, ladies and gentlemen, that's an indication of neutral price movement, indicating that either at 99 all the way up to 100,000, just above 100,000. That is the equilibrium value, the potential intrinsic value at the moment for NASDAQ. Of course, though, there's volatility regardless of that. But that's a level where you've got a mixed indication with a slight bearish bias. So any other questions, ladies and gentlemen? Or any assets you want us to focus on? Right, so I can't see any other questions. So, ladies and gentlemen, please keep in mind that we provide a lot of educational material for free. We have live sessions like these. On our webinars, we even have discussions and we have polls and we have a lot of comments and we speak about everybody's experience, what people think is going to happen within the market itself. So there's a lot of benefits that we offer traders for free. Also keep in mind that we have trading accounts with no overnight fees. We have trading accounts with zero spreads as well. So keep that in mind as well. All is offered for free as well. Feel free to register with no cost. Scroll through and look at our products. And of course, I'm sure you'll find a lot of useful tools there. Now, in the meantime, ladies and gentlemen, hopefully you found today's session enjoyable, educational, informative. Of course, trade safe, trade responsibly. Enjoy the rest of your day. Enjoy your weekend. If you need any assistance, feel free to contact our support team, which is always available and very quick to respond. Now, ladies and gentlemen, take care. Enjoy the rest of your afternoon and goodbye.